problems and solution on cash budget using Excel. So in the previous class we have discussed about the budgeting and budgetary controls. So in that we come across different types of budget. So under the different types of budget we are going to now solve problems on cash budget. So on my left hand side we have a problem on a cash budget, and on the right hand side I just created a template to save the time. So when you're preparing a cash budget, so what are the basic things that we need to remember? So the cash budget is basically prepared to understand so what is the projected cash balance, surplus or deficit that we are going to be incurring in a given budgeted period. And by preparing this cash budget we'll come to know what are our expected cash inflows and outflows. So in this we need to consider only what are the cash receipts and cash payment during the budgeted period. So if you look into this particular first problem, so let's read it and we'll understand how we are supposed to prepare it. A company is expecting to have rupees 25,000 cash in hand on 1st April 2003, and it requires you to prepare an estimate of cash position in respect of 3 months from April to June from the information given below. So we are given the details from February, March, April, May and June, but we are supposed to prepare the cash budget from April to June. So now the question may arise, why they are given this earlier period information. So since we are preparing a budget from April, May and June, so even when I given the earlier period information, this may be basically to understand if any of the payments are delayed which may fall during our budgeted period, or whenever we are going to make any credit sales and the collection we are going to be receiving in subsequent period. So whether those collections are going to fall during this particular budgeted period. In order to get that particular information, so we will be given some earlier period details. So we are given a sales figure, purchase, wages and expenses. So the additional information given for us is the period of credit allowed by suppliers is 2 months. So we purchase goods from our suppliers on credit basis and they are providing us 2 months credit, which means the February purchase details what they are given, the payment of this 40,000 is going to be paid after 2 months, that is in the month of April. So March purchase payment will be made in the month of May, and April month's payment will be made in the month of June. Like this is the reason why the earlier period information will be given for us, and accordingly we need to look into those. 25% of the sales is for cash and the period of credit allowed to customer for credit sales is 1 month. So if you again look into the sales figure, 70,000 is the sales in the month of February. Out of 70,000, 25% is the cash sales. The balance 75% is credit sales. So that credit sales that which we are going to do in the month of February, the amount is going to be collected after 1 month, because the credit sales period is 1 month. So which means the 75% of the credit sales that we do in February, the amount is going to be received in March. March month 75% credit sales amount will be received in the month of April. April month credit sales will be received in the month of May. Accordingly the period moves. Next, delay in payment of wages and expenses 1 month. So again, what are the expenses and the wages we are incurring a given month, so the payment of that will be made in the next month. That's called as a delay in payment of expenses and wages 1 month. Income tax rupees 25,000 is to be paid in June 2003. So we may come across some specific item of expenses which will be paid in a particular period only. So in this case income tax is paid in the month of June. So this is one more item which happens as an outflow in the month of June. Now having read into the problem, so in the very beginning they are given us the opening cash balance expected on 1st of April is 25,000. So now when you are preparing a cash budget, so we need to prepare the budget only for the period stated. So we need to look into what is the budget period here. It is April to June. So I will be preparing only for April, May and June. So the title goes cash budget for the period April to June, particulars, and first item should be for the opening cash balance, then followed with the cash receipts and cash payment. So I left a few rows here to record the cash receipts. Then I have mentioned here cash payment to record all the cash payments. So I'll start with the first one, that is opening cash balance. It is given as 25,000. Next, so before we directly record the cash receipts and cash payment, we need to find out is there any working note to be done. And in this problem, if we observe, so we are supposed to do few working notes. One is to understand how much is the amount we are going to collect on account of cash sales and credit sales. Then, since there is a credit period allowed by supplier is 2 months, then what is the amount that we will be paying in April, May and June. So in order to understand these two things, so we will go for a small working note. So the first working note will be computation of amount payable to suppliers. So I mentioned all the months, February, March, April, May, June. The purchases made in all these months have been mentioned. So I'll be mentioning here, so amount payable to supplier. So according to the problem here, period of credit allowed by supplier is 2 months, which means now 40,000 payment will be paid after 2 months. So this amount 40,000 will be paid in the month of April. Then March 50,000 will be paid in the month of May. And April 52,000 will be paid in the month of June. Now these figures are important for us while recording it in our cash budget under the cash payment section. Similarly, now on account of sales, how much amount will be receiving, we need to look into. So again, I mentioned the sales figure, a computation of amount receivable from sales. I mentioned February, March, April, May, June. The amounts are written. Now out of the given sales, 25% happens to be the cash sales, which means 25% amount will be receiving in the same month. The remaining 75%, which is credit sales, that we will be collecting after 1 month time. So first I'll mention here how much is cash and how much is credit. 0.25 is 25% of 70,000. This is my cash sales. The balance, that is 75%, is the credit sales. So accordingly, I'm going to, since I use a formula, just keep calculating for all the months. So accordingly, 75% of this, 25% of 80,000, 25% of 92,000, 75% of 92,000. Like this we have calculated. Now, since our budget period is April, May and June, on account of cash sales, we are going to collect this amount in a same period. But on account of credit sales, so what is going to happen? Let's look into. So collection from credit sales. So since we are giving a 1 month credit period, so this 52,500 which is there in the month of February, so this is going to be collected in the month of March. Next, 60,000 will be collected in the month of April. Next, 69,000 in the month of May. And this 75,000 May credit sales will be collected in the month of June, because we are giving 1 month credit. Now, having mentioned here which amount we are supposed to consider as collection from credit sales. So since our budget period is April, May and June, so we are going to consider only these three figures. I hope it is understood to all of you. Next, delay in payment of wages and expenses 1 month is mentioned. So directly when you are preparing cash budget, we are going to look into that particular aspect. Now, having done this working note, let's go for incorporating this into our cash budget. So let me take the first one. So what are cash inflows in this problem? So the cash receipts are basically on account of two things. One is the cash sales and one more is on account of collection from credit sales. Now on account of cash sales, what is the amount we will be receiving? So here the values are mentioned: April, May, June. I just copy them. I just put up here. Since I use a formula, so it is having some values. So 23,000, 25,000, 30,000. 23,000, 25,000, 30,000. Similarly, on account of credit sales, how much money we will be collecting? 60,000, 69,000, 75,000. 60,000, 69,000, 75,000. So these are the only two items on account of sales, cash sales and collection from credit sales. So this will come under the head as a cash receipts. Now under the payments, what are the various payments we are supposed to do? The first payment is on account of payment to suppliers. And for this also we already prepared a working note. So 40,000, 50,000 and 52,000. 40,000, then comes 50,000 and then comes 52,000. So this is an account of payment to suppliers. So we have considered the sales, then we have considered the payment to suppliers. Now the third point, delay in payment of wages and expenses 1 month. Let's look into wages. Payment of wages. So since the payment of wages is delayed by 1 month, which means February payment is made in the month of March, March payment is made in the month of April. So first I'll record March, 8,000 rupees which is here, so that will be paid in the month of April. Similarly, April payment is made in the month of May, so 9,000 goes to May. Then May 10,000 is paid in the month of June. So in this way, so the payment of wages is considered. Similarly, payment of expenses. So payment of expense also delayed by 1 month. So February payment will happen in the month of March. March will goes to April. So 7,000 April. April 7,000 becomes to May. And May's 8,000 goes to June. Having taken care of the expenses part, there is one more item, that is an income tax payment. Payment of income tax. So this payment happens in the month of June, that is 25,000. So once we have completed all the receipts and payment part, now we need to close this cash budget month by month. So first I'll close the first April month. I'll take the total of all. So this becomes my total cash receipts. Similarly, I'll just take the payment total. This is total cash payment. So the difference between these two will be my cash balance. So net cash balance from the total receipts minus cash payment. So you get 53,000. So this 53,000 becomes the opening balance for the next month. So I'll write here opening cash balance for the next month, that is May month, amount to 53,000. Now again I am going to close this total. I get 1,47,000. Again we take the total payment 66,000. Again we need to take a difference between total receipts minus total cash payment, 81,000. Now again this 81,000 becomes the opening balance in the next month. Again we close this. we get 1,86,000. So sorry, 95,000. So the difference 91,000. So in this way the cash budget is prepared. So by preparing this cash budget, what is that we are going to understand is, so if you look into each of this month, April month there is a surplus of 53,000 cash balance. So May month we have 81,000 and June month we are having 91,000. Now by looking to this, the firm will understand like in which particular month they will be having a surplus cash balance, and if the company wants to keep this surplus cash balance idly, it is up to them, or else they can maintain what is the required cash balance for the next month, and the remaining amount they can invest in some short-term instruments. So in this way the first cash budget are prepared. Now let me go to the second problem. Okay, so in the second problem we introduced some more items. Okay, yeah, in the second problem let's look into Prasad and company wishes to prepare cash budget from January. Prepare a cash budget for the first 6 months, okay, from the estimated revenues and expenses. So we are given the estimated revenue and expenses starting from Jan to June. So the total sales figures, material, wages, production overheads, and selling and distribution overheads. Additional information: cash balance on 1st January was 5,000. A new machinery is to be installed at rupees 10,000 on credit, to be repaid by 2 equal installments in March and April. Sales commission at 5% on total sales is to be paid within a month of following actual sales. So when we read these two adjustments or the additional information, so company is planning to install a new machine which is costing 10,000 rupees, and they are going to purchase it on a credit basis, but the payment of the first installment of 5,000 falls in the month of March and the next one in the month of April. Company is also paying a sales commission at 5% on the total sales, and this is going to be paid within a month of following actual sales, which means when the sales figures, now January sales is 10,000, so we calculate what is the commission of on 10,000, and that commission is going to be paid within a month, that is February. Similarly, February is 11,000 is the sales, we calculate 5% of this, the payment of this will be made in the month of March. So in this way, so we are going to calculate the commission, and accordingly we will be doing the payment in the subsequent months. Rupees 5,000 being the amount of a second call may be received in March. Share premium amounting to rupees 1,000 is also obtainable with a second call. So this is one cash inflow on account of the second call. Company is going to receive 5,000 rupees. At the same time, share premium amount also will be received. Next, period of credit allowed by supplier is 2 months. So in the previous problem it was also 2 months. So in this problem also it is a 2 months period. Period of credit allowed to customers is 1 month. So we are providing 1 month credit for the credit sales. Delay in payment of overhead is 1 month. So for the different overheads, production and selling and distribution overhead, the delay is 1 month. Delay in payment of wages half month. So which means, so wages 2000 rupees which is incurred in the month of January. So half payment means 1000 rupees is paid in the month of January, balance 1000 is paid in the month of February. Similarly, February 2200 is there. In this, 1000 is of previous month, 1100 is of February month. So total we are going to consider and make the payment in the month of February. So in this way, the delay in payment of wages of half month is going to be captured. Assuming cash sales to be 50% of total sales. So if cash sales is 50%, remaining 50% is the credit sales, and that credit sales amount is going to be collected after 1 month time. So in this way, this problem we need to prepare cash budget for next 6 months time. So accordingly, I'll just put the format because it's a 6 months budget. Starting from January. Amount in rupees. So cash budget for the period Jan to June. So there is the opening cash balance. If it is given, we need to consider. So again, before we go for preparing this cash budget, we need to understand, is there any working note to be done? And in this problem, there are quite a lot working notes. One working note is basically on payment to the suppliers. One more is on sales, computation of cash sales and credit sales, collection from credit sales. One more working note is on the sales commission, because after we calculate sales commission, since there is a delay of 1 month, so we need to prepare sales commission working note. Plus one more important working note is in terms of payment of wages. Since it is a half month is a delay, so we will have a bit complex calculation, so that also we are going to prepare. So let me show you one by one. So first let's only look into the computation of amount payable to the suppliers. So we are given we are going to start from January to June. We are not given any earlier period details. So whatever the purchases we made from January to June, we have mentioned here. Now the credit period given by supplier is 2 months. So accordingly, payment to suppliers. Now January payment will be made after 2 months, that is in the month of March. Now February 7,000 payment will be made in the month of April. March payment will be made in the month of May. April payment will be made in the month of June. Now what about this May and June? So May payment will be made in the month of July. June will be made in the month of August, but those months are not falling in our budgeted period, so we are not going to consider it. So we are going to look into only these items. So in the January and February there is no payment on account of creditors, so only from the month of March the payment is going to start. Next one is about computation of amount receivable from a sales activity. Now again the sales figures are written for all the months January to June, and since this happens to be our budgeted period also, and we are not given again prior period sales figures, so let's do the calculation with the help of this information. So 50% of the sales is cash sales. The balance is credit sales, that is balance 50% is credit sales. Now I'm just going to drag this one. I use the formula. This one also I'm going to drag. Now this cash sales amount will be collected in the same period, and since a budgeted period also is from January to June, so all these amounts are going to be collected in the same month. Now this credit sales amount will be collected based on this timeline. So the period of credit allowed to customer is 1 month. So 5,000 credit sales which happened in the month of January, this will be collected in the month of February, and February sales will be collected in the month of March. Then March becomes April. April sales becomes May, and May will be collected in the month of June. So in this way we will be collecting the money, and these figures will go in our cash receipts. So on account of cash sales, this is are the collections. On account of credit sales, the amount will be collected in this particular manner. Now the next working note is computation of sales commission. So as it is mentioned, so whatever sales happens, 5% of the sales is considered as a commission, and that payment is going to be made in the following month of the sales. We need to make the payment. So we are given the sales figure for all the months, January to June. 5% if I calculate, it comes to 500 rupees. So accordingly, I'll calculate for all other months 5% of the sales. Now this payment will be made after 1 month following the sales. So 500 will be paid in the month of February, 550 next, 700 next, 900, then comes 750. So in the month of January there will be no payment on account of commission on sales, but subsequent month we will be making the payments. So in this way the payment of sales commission is going to be computed. The next one is about computation of wages. So the wages is given in the problem already. So in the month of January to June, how much is the amount of wages we are supposed to pay, it is mentioned. But even though the payment is 2,000, 2,200 in respective month, since there is a delay in the payment of wages by half a month, which means in the month of January we will be making only 50% payment of the total wages due. That is only 1,000 rupees will be paid in the month of January. The balance 1,000 will be paid in the month of February, and February's payment, which is there 2,200, again of that half payment will be made in the month of February, remaining half will go in the month of March. So one of the easy method to calculate the payment of wages here is, since we are considering 50% payment of previous month and 50% payment of wages of the February month, so what we will do is we just put up like this: 0.5050% means 0.5 into previous month plus current month. If we do, we get the answer. Similarly, here what I am going to do, same I am going to use the formula: 50% of previous month, that is February, plus current month. So by doing like this, we are going to calculate the wages. So again, I am just going to drag using the formula, and we are going to come to know how much is the payment on account of wages. So these are the basic calculation working notes which are supposed to be doing for this particular problem, and all these figures are going to be considered while we prepare the cash budget. So you can just have a look here how the calculations have been made. Now let's move on to the main part. So the opening cash balance in this problem, they are mentioned in the month of January, is 5,000. I'll write up 5,000. Now what are the cash receipts? So let me start one by one. On account of cash sales, this is a cash receipt. Then on account of collection from credit sales, this is another amount of cash receipt. Then one more cash receipt that we have in this problem is on account of a call money. I'll write here second call money. In addition to this, we also have something called a share premium. So these are the items of cash receipts. So let me put up the values. So on account of cash sales, what is the amount we will be receiving? So since we have made a calculation here, 5,000, 5,500, 7,000, just copy it. And I'm going to paste it. So again the same problem, that is, since we use a formula over there, so it is not coming. I'll just enlarge this particular sheet because already we are at the problem, so we need to just put up the values. So I'll just take the values from here now. 5,000, 5,500, 7,000, 9,000, 7,500, 10,000. Similarly, on account of collection from credit sales, the figures which are highlighted in yellow, that we are going to consider 0, 5,000, 5,500, 7,000, 9,000, 7,500. Now on account of call money, what is the amount we are supposed to receive? So 5,000 being the amount of second call received in the month of March. Share premium 1,000 is also obtained with a second call. So in the month of March, we are going to have 5,000 and 1,000. 5,000 on account of second call, 1,000 on account of share premium. So these are the receipts. Now coming to the payment part, again I'll enlarge this sheet. So I'll write here payment to suppliers. So we are calculated in the working note number 1, and these figures we are going to consider. So Jan 0, February 0, 10,000, 7,000, 7,000, 11,000. This is on account of payment to suppliers. Next is commission. Payment of sales commission. So again 0, then 500, 550, 700, 900, 750. Next, wages. Payment of wages. So January 1,000, 2,100, 2250, 2300, 2150, 2250. Now what are the working notes calculation we have made? We have taken care of all those things. Now we have another few more items, that is overheads. So production and selling and distribution overheads, and the timeline is delay in payment of overhead is 1 month. So what I am going to do now is, I'll just mention here, that is payment of production overhead. Since there is a delay of 1 month, means January payment we are not going to do. So instead January payment falls in the month of February. So this January 1,600 will go to February month. Accordingly, just move on 1 month lagging. February becomes March. March payment becomes April. April 1,750 goes to May, and finally 1,600. Same way in terms of selling and distribution overheads. Payment of selling and distribution overheads. So January nothing, but January payment will goes to February. So 400, 450, 450, 500 and 450. That's it. Now in addition to this, we have one more adjustment, that is we are going to install a machinery and we need to make a payment of 2 installments. So payment of installment, machinery installment. So 10 out, the total value of his machinery is 10,000, but 5,000 is paid in the month of March and 5,000 is paid in the month of April. So January, February, March. March 5,000, April 5,000. So in this way we have taken care of all the items of this particular problem. So the next question will be balancing. Now again, when you are doing the balancing, again okay, so let's do the total first. The total of receipts, total cash receipts, that is 10,000, total cash payment 10,000. Now the difference. So if the cash receipt is more than the cash payment, then we say it's a surplus. The closing cash balance, in this case it is 9,000. Now this closing cash balance 9,000 is considered as an opening for the next month. In the beginning we write first 9,000 opening balance. Again we take the total, we add up the payment total, and we take the difference. So 14,900. Now again 14,900 becomes the opening balance. Take all the totals, payment total, again find the difference, 13,500. In this way we need to just go step by step in closing every month cash receipts and cash payment. So again 12,350 becomes your opening balance. So again 28,850 minus 12,300, 16,550. So these are the surplus cash balances in of all the month, and among all the months if you observe, so initially it was just 9,000. So as the month proceeds, so company was able to have slightly more surplus cash balance. And if you look into this surplus cash balance is indicator of the receipts versus the payment. If the anticipated receipts happens to be more than the payments, the company will obviously is going to have surplus cash balance, and this indicates the company is in a better position in the budgeted period in terms of managing its cash affairs. So these are the two problems on the cash budget. The next two problems will be discussed in the next video. Thank you.